Okay, so let's talk about building wealth. A lot of people think it's just one straight line, but it's not. It's really a journey with 4 distinct stages. In this explainer, we're going to break down a dynamic framework that shows you how your strategy has to evolve over time, not just to make money, but to actually grow it and protect it for good. So let me ask you this right off the bat. Do you have a financial plan or just a bunch of financial goals? It's a really important difference, you know? A goal is like wanting to end up in a certain city, but a plan, that's the actual map, the GPS that reroutes you around traffic and roadblocks. A static goal isn't enough. You need an adaptive strategy. And that's really the core idea here. Your priorities, the tactics you use, your whole way of thinking about money has to change as your life changes. What you do in your 20s to get started is not what you'll be doing in your 50s to finish strong. To make this super clear, we're going to use an analogy. Think of it like you're constructing a building. It just makes sense, right? You can't put up the walls before you poured the foundation, and you definitely can't put the roof on before the walls are up. Each phase builds on the one before it. So let's start at the beginning. Phase 1, the foundation. Now, this whole phase is about playing defense. It's not about the exciting stuff. It's not about getting rich quick. It's about creating a rock-solid base that can handle life's curveballs so one bad surprise doesn't tear down everything you've built. And these are the 3 pillars of that foundation. Getting rid of high-interest debt is like patching up a huge crack in the concrete. That debt is actively draining away the money you need to build. Your emergency fund, that's your shock absorber. And financial discipline, well, that's just the quality of the materials you're using for the whole project. Let's be really clear about what an emergency fund is and what it isn't. It is not an investment. It is insurance, plain and simple. You don't measure its return in dollars and cents. You measure its value in its ability to protect your real investments, your stocks, your retirement accounts, from being sold at the worst possible moment just to cover a crisis. And financial discipline is where the plan actually happens. It's just a series of small, conscious choices you make every day. You know, living below your means isn't about feeling deprived. It's about intentionally creating a gap between what you earn and what you spend. Every single dollar you save is another worker you can send out to build your future. All right, so once that foundation is totally solid, we get to pivot. The entire strategy switches from defense to offense. Now it's time to start building upwards, to actually get your money working for you by creating the growth engine for your wealth. You'll hear experts say this all the time. Cash is critical for your emergency fund, absolutely. But holding way too much of it beyond that is actually a losing strategy. And why is that? Because of the silent wealth killer, inflation. Every single year, the cash sitting in your savings account buys less than it did the year before. This slide just illustrates it perfectly. You've gotta own assets that grow faster than inflation eats away at your money. Think of it like this. Your money in a savings account is on a slow escalator going down. Your money in growth assets, that's on an escalator going up. And when you look at the chart, the big takeaway is the gap. You see that space between the average rate of inflation and the historical return of the market? That's it. That is the space where wealth is actually built. And over decades, that gap creates a ridiculously powerful engine for growth. So what fuels this engine? A consistent investment rate. This right here is the actionable number. You might not be able to hit 25% right away, and that's fine. Maybe you start at 10 or 15%. But the goal, the strategy, is to systematically push that number up until you're putting a quarter of your income into your growth assets. Okay, so your growth engine is starting to work, your accounts are growing, and that creates a brand new challenge, taxes. So in phase 3, the focus shifts to building a tax shield, because protecting your wealth from taxes becomes just as important as growing it in the first place. And this chart just visualizes the problem perfectly. For a lot of high earners, their single biggest expense every year isn't their mortgage, it isn't their car, it's their tax bill. And what that means is that making that slice of the pie smaller is one of the most powerful things you can do to speed up your wealth building. So the strategy here is to use the tools that are available to you. These aren't shady loopholes, they are government-approved incentives. Your 401k or IRA gives you a tax break right now. An HSA, man, with that triple tax advantage, it's one of the best retirement accounts out there. And of course, real estate has its own set of powerful deductions. And your strategies here get more sophisticated over time. At first, you're just focused on maxing out your accounts, but later on, you can use more advanced tools, especially with real estate, that create what are called paper losses to legally shield your regular income from taxes. It's a huge wealth accelerator. And finally, we get to the top of the building. In this last phase, the game totally changes again. The main goal is no longer about aggressive growth and piling up more assets. It's about preservation. It's about protecting and securing the wealth that you've spent your entire life building. The mindset does a complete 180. When you're accumulating, you're focused on the upside, right? How much can this grow? But when you're preserving, you're focused on the downside. Your tolerance for risk goes way down. The focus shifts to just locking in what you have, paying off major debts, and making sure everything is set up for the future. This table is really helpful because it gives you a data-driven roadmap for the journey. Just notice how the main focus shifts from investing to tax efficiency to preservation as you move through your career. And those net worth multiples, they're like little guideposts, helping you see if you're on the right track. So with this whole blueprint laid out, the most important question is, how do you actually apply it? Well, the very first step is to be honest with yourself and figure out exactly which phase you're in right now. So let's just recap that journey real quick. You start by building an unshakable foundation. Then you build the growth engine on top of it. After that, you protect the whole thing with the tax shield. And finally, you secure the entire structure for the long haul. You can't skip a step. Each one is absolutely critical. Your answer to this question tells you exactly what to do next. Are you still working on that emergency fund? Is it time to bump up your investment rate? Do you need to talk to a tax professional? Or is it time to think about estate planning? Knowing your phase gives you total clarity on what your number one priority should be right now.